the IPO is dead. People sort of seem that to be controversial, but it used to be sort of the most innovative companies in the world were IPOing.
It doesn't matter if you vibe coded a bad idea. It's still a bad idea.
Coding is going to stop being the moat. Code the chain. The only thing that really matters is where the users are.
Welcome to Stateful, a Pantera podcast. My name is Mason Nystrom, and today we have a very special guest, Austin Adams, the founder and CEO of Whetstone Research, the creators of Doppler Protocol. We're really excited to announce that we just made a seed investment in Doppler, and here today to share more about Doppler and all things capital markets is Austin Adams. Austin, welcome to the show.
Yeah, thanks for having me. Lovely to be here. Love yapping about all things capital markets. So excited to dive deep into the sort of full gambit of all of it.
You've obviously been building in the ecosystem for a long time. You were one of the architects of Uniswap before and have a very nuanced take on token launches, token issuance, and what goes right and what goes wrong with TGEs.
Yeah, so I'm Austin. I run the Doppler Protocol. We do asset issuance, so we call it customized capital markets for all things on-chain. So we help manage like the economics, the contracts, everything for users. We sort of power like a bunch of different publisher exchanges that like want to build markets with things they're publishing. We also sort of do like sort of nascent markets that we're pretty excited about. And so like Zora and Banker, FX Hash, sort of like a bunch of like Paragraph. A lot of these things that we're sort of excited about is like bundling markets together with issuance or creation in general. And we think that that lets you have really high quality markets for very exciting things. And so, yeah, we work on a lot of different tokens. We've launched like 7 or 8 million tokens, and a lot of them are not super valuable, but I do think like some of them are very interesting and very valuable and push the space forward.
I was recently looking at a stat from Richard Chen, who's another VC in the space, and he posted that 20% of all TGEs in 2025 are below their issuance price or their TGE price. Why do you think token launches have been broken today, and how do we fix it?
The take that I have is I think the token launch, not even the token launch, honestly, the entire initial offering has become problematic because I think that there's like a pretty safe and simple strategy to extract value out of it. We started seeing this originally in crypto with like sniping on token launches, but I think we've actually seen it progress to traditional TradFi markets. So that we've seen, what is a lot of these these IPOs are getting sandwiched essentially by people who are coming in, buying the asset early, waiting for believers or something to come in and buy at a higher price and then selling on them. This is like everyone always says like, oh, it's sniping, and I'm like, it's kind of like it's happened at a much deeper level than that. And so I think that's why a lot of these tokens are going down, is because the initial sort of market that's being set up is very quite poor. It's very extractive to the believers who want to speculate or buy and take part in this ecosystem, and it's very extractive to them. There's been a lot of papers written about this with respect to equities markets, and so I'm sort of just taking those. I'm like, look, guys, this is like not. We're kind of trying to reinvent the wheel a lot, but a lot of it there's a lot of research on it, and we have to reinvent the wheel in some sense because they don't have it solved either, and so it's sort of all working together. But yeah, I mean, I think overall, the TGE is probably the most important thing a company does. Not the most important thing, but one of the more important things a company does. And I think the process is just really bad. And it's very destructive to builders. It's very destructive to capital allocators. And sort of need to figure out how to simplify it end to end to make it better for everybody.
Right. And so Doppler provides this custom capital market infrastructure to improve the token issuance and let's say like capital formation process. Expand a bit more on like how we solve this problem. What are the steps or things that like token project founders should be thinking of that they're not when they just go through like a vanilla TGE?
Yeah, I think these sort of like getting integrated in everything is like significantly more difficult than people think about it. Founders ideally are doing one TGE. They are not thinking about these things as many times as they probably should. And so a lot of it just is working with people who've done a lot of them. It's whenever we work with founders who are doing their TGE, they're always like, this is the most stressful thing I've done. And I'm like, yeah, it's, they're like, does it ever easier? I was like, no, it's always this stressful. And so it's nice to work with these teams and be an air of confidence, I would say. But I mean, overall, I think like one thing that we've thought a lot about is like everyone wants something slightly differently. They all want something slightly more customized. No one's cap table is the same. No one's economics is the same. All these sort of like a lot of these economics of the token are downstream of how the protocol, like the underlying business or protocol works. And so it's pretty much impossible to have a one size fits all because you're trying to stuff a bunch of like insanely different things into your protocol. Like, one day or over the last like minute, there'll be like two, or have been like a blog. There might have been an IPO. There might have been a AI agent launching a token. And the sort of these things are all just like completely different. And so you have to build these custom capital markets in a way that enables sort of these deep markets without intermediaries. And, we always say like one size fits none. It's like if you have a one size fits all solution, like it's good for some things, but once you try to expand it to other things, it sort of breaks down. And that's what we've seen, I would say, in most of these markets is that people build something, it gets figured out, or they try to extend it to something else, and then it just completely breaks down. And that's sort of, I think, what we've seen a lot with these like one size fits all token launchers. We work with our customers to edit these things very rapidly, and I think it's sort of the best way to go because no token launch is the same; they're all different, and so you got to treat them that way.
You're watching Stateful, a Pantera Capital podcast. Through our over decades-long investment track record, we bring on the best founders and investors to talk about everything that's happening in crypto. Please remember to like, subscribe, and follow us along to catch us on the next episode. Now back to the show. I think we've obviously gotten to a point in the market where we're seeing token issuance at a rapidly accelerating rate. Doppler, as you mentioned, has launched millions of tokens today that equate to billions of dollars of value. When you work with a new type of founder to issue a token, what does that process look like, and what are you kind of currently advising them to do in terms of both the issuance and kind of the capital formation? Or said another way, like what are the best practices that Doppler is bringing to the market today?
Yeah, so I think like we try to think a lot about sort of every part of the stack. So it's like vesting, what is your, IP, what does the sort of like initial pricing look like? I think that there's really not a lot of like I would say learnings that we can give to the market because as I said, like it's honestly like every single thing is different. There's that meme that's like the working at the it's like working at the factory, and they're like, I guess we're doing circles now, and I'm like, that's how I feel like sometimes with us. One day we wake up and we're like, oh, okay, I guess we're doing AI now. I guess we're doing art now, and so it's hard to have sort of like a one size fits all solution. But I would say that the thing that I think is really important is creating like a deep protocol owned liquidity pool. I think is like very, very underserved. We've seen a lot of teams do their ICOs and take a ton of and use that to raise. I think it's actually quite bad. I think it's problematic for users to do that because the people you're raising from in the ICO are very different than the people that like that are on your cap table already. And so you want to create like a very, very deep, well-priced, actively trading liquidity pool. Otherwise, you're sort of going to get this like economic death spiral that happens. So we see this a lot with tokens. They pump really rapidly and then they die immediately, and then you're just like dead. Well, there's two ways to stop that actually. It is to have a high quality price discovery auction that immediately goes into the liquid market, and that is deep and liquid. I think those are sort of the two ways you stop that. We've seen a lot of ICOs where people ICO and they wait like months to open up trading, and I'm like, you're just like, why'd you do it? Like, there's no point to do that because the price has changed in those 4 months. I mean, the price honestly changes every hour, it changes every second. And so by delaying your ICO a lot, I think it's actually very problematic. And that's one of the things that we think a lot about is like, how do you enable all the orchestration necessary for these teams to go end to end in a way that's like clicking one button and your token is live. Like you don't have to, you don't have to like have your custodian send you your token from Anchorage or something to initialize the pool. Those small things can cause delays, and they generally do delay, and that breaks your price discovery, and then it panics the market. And so, bundling all of these things together is really hard, but it actually is the like most simple way for founders to get things done. Like you just want it to go well. You just want no delay, just kind of want like an 80% experience and like you're feeling pretty good. And so that's what we recommend to founders is like simplify everything, just go to market, have a liquid price and send it. And like if you have a good product, you have a good product and it will work.
And talk about maybe this importance of pricing. So obviously, a lot of times I think when you look at whether it's a traditional IPO or even like a token generation event, like an IPO just says, okay, the bankers agree that we're going to launch, we're going to do the IPO at this price. Tokens kind of operate similarly, like you maybe get some buy around market makers or what price that they're willing to make at some floor. How does Doppler improve price discovery, and why is that important for better token launches?
Yeah, I think like the most concrete example is the Circle IPO. I think it's like something I've written a lot about is, the Circle IPO happened, like you said, through market makers and book builders, and they came to a price. And then I think it was Clarity that our genius that happened. And it just absolutely and just ripped the price completely because Circle was probably one of the better beneficiaries of stablecoin legislation. And that was just impossible to predict at the time because the IPO process takes months and months. And so what happened was they spent multiple months pricing this asset in a world where Genius wasn't passing. And then it passed this massively repriced Circle. And all of the sort of books they had spent 3 months building were just worthless. And so they just had to just essentially YOLO a price. And we saw this one of the larger IPO pops that's ever happened or that's happened in the last like 10 years happened with Circle because of this repricing. And so what we always talk about is like you should have that book building pricing event in the market in the exact same time because you're gonna go live with that. If you want to have sort of the best possible seamless experience with your chart, you sort of need to have the price discovery auction tied together with the liquid generation of the market. And I think like there's been a lot of people who don't do that, and it's like, why did you even try? Like, why did you even find the price to begin with, right? Like, it's going to get repriced immediately when the market happens, and that will cause losses. And IPO pops are actually very problematic for, especially for like employees of the company. There's actually a lot of tax issues with it. There are a lot of liabilities that happen on the company side, so it actually is not always good. It's actually quite bad sometimes. And so we think about like how, and also that pop creates disruptive. It hurts the price of the token. It hurts the price of the asset. It's in a market inefficiency happening, and to correct that market inefficiency, there needs to be some action that happens, and usually it loses money for the people. And so we think like if you want to have the most, you want to leak the least amount of money, you need to tie these two things together and run it.
There's a framing of the IPO pop that, like you said, it's a mispricing of the asset and it's relatively extractive and doesn't benefit the actual, existing stakeholders of that asset. You've kind of previously, written about this a concept of like the death of IPOs, or how IPOs have obviously lost a lot of their favor. We see companies obviously going public later and later. That is, one a kind of like quote unquote death of IPOs. But maybe expand a bit more on what you mean when you say that.
Bill Gurley was actually on TPBN talking about this, and I think it's like people don't think about like what the IPO used to be. Like in the 70s and the 80s, these extremely novel technology firms that were like doing computing were IPOing all of the time, and they were IPOing at like very small evaluations that were not crazy. Like
Basically,
Amazon.
what are the equivalent of like token market cap?
Yes, exactly. And so, like, what the example that Bill Gurley gave was that, like, like Amazon went public under $1 billion. It's up 1,000x in the public markets. Like, that's unreal. That's crazy. And that used to happen like a lot. And I looked at Apple. So Apple went public their second year in existence. They did not have the Mac, the OG Mac yet. Like it was a completely different experience. Like if Apple went public today, they're going public at $1 trillion. Like we're seeing OpenAI go, public at $1 trillion. Like that's kind of ludicrous, right? Like what's the point of, you're just having private market price discovery at that point? And I guess I talk about the death of the IPO. Like the IPO is dead. People sort of seem that to be controversial, but it's just like, it's true that the amount of the IPO market is just it's a shell of itself. It used to be sort of the most innovative companies in the world were IPOing early in their life cycle, giving upside to retail, giving upside to institutions, giving upside to everyone, and then having these public pricing events that drove a lot of capital and interest to these things. And it's just not true anymore. It's just not what happens. Like if you wanted to tell a banker in the 70s that OpenAI would go out at like what is probably like a top 20, 30 company in the world, I don't know the exact number, but like they would be like, that's insane. Like how'd that happen? And I think they're right. Like I think the IPO market is the best way for the public and essentially just everyone who's not a private investor to get upside in these assets, and they just fundamentally can't anymore. And there really hasn't been like a one reason why. It's just been a huge collection of a lot of small things that have added up, and that it's actually made it much harder to solve than it would be otherwise, because it's not just one thing that you can click a button and fix. It's like 50, 60 things and like these crazy changes in how the economy has broadly worked. And so, yeah, I mean, the IPO market, it just is dead. It's if anything, OpenAI and SpaceX are showing this. They're going public at what is likely their terminal evaluation. I mean, maybe it goes up from there. I'm not saying it doesn't, but like it will not go up as much as it did previously, unless something crazy happens, and then
Right.
I guess we'll
An
just be wrong
IPO
at that
is
point.
an IPO is
Yeah,
becoming the vehicle of last resort rather
yeah.
than an early option, as it previously has been in the capital markets. Let's talk about the future of on-chain capital formation as it relates to the death of IPOs and how IPOs potentially move on-chain. Pantera, one of our portfolio companies, Figure Markets, went public, last year. They recently just did kind of an on-chain capital formation event as well, starting to show the pairing of at least, existing companies. But there's also a world in which, we see companies just forego your traditional, IPO and launch directly on chain. How do you think about this evolution and the future of on-chain IPOs and on-chain capital formation?
I think the problem with like one a bunch of the there's a bunch of small problems with the IPO market just as it exists today. Like one of those is IPO book runners don't want to do small assets because it's just not valuable for them, and like this is not something you can solve. Like Morgan Stanley or whatever is going to make more money on the OpenAI round than they would doing 1,000 small companies. And so I think just fundamentally the reason why I'm so bullish on chain capital issuance is that it bucks the trend of we can't just do, as I sort of said, there's not just one small thing we can do to fix this market. We have to do like a million things to fix this IPO market. And the only way we're really going to be able to do that is through reimagining almost every single part of the asset life cycle that's necessary. And I think like that's why, and I think that's what tokenization allows. It allows you to spin up these really complex markets in a very efficient way that is just fundamentally impossible to have on private markets. So like if you want to do an IPO, you got to get a market maker, you got to get an underwriter, you got to get, all the regulatory approvals, you need to get all of the infrastructure in place for the exchange. And like these things are just really hard, and every single little small piece makes it harder and harder. And I think if we just sort of spin it on its head and we have these issuances that happen in these decentralized exchanges in a permissionless way, it's actually very simple to do on chain. It's actually the other parts of the harder part is getting enough capital interest, getting enough regulatory interest to solve to allow companies to do these. But yeah, it's going to take a huge change, and it's unclear. Every time I read a paper about like how do we solve IPOs, the answer is always like we have no idea, and like I'm just like we gotta. Oh my god, it's great. That's a great answer. That the best people in the world have no idea how to fix these things, and it's going to take just will to solve it. And I do think like that's the like markets on chain are much better at this and much better at experimenting than markets off chain because it was never really built for that. But markets on chain really are built for this.
And I think there's a bit of a hesitancy because like obviously, IPOs have a lot of infrastructure that is tied to them. When you think about issuance and like the quality of assets, that is one thing that like the IPO pathway presents because like you can, go issue on NYSE or NASDAQ, and that comes with like an element of quality. As we look towards asset issuance on chain, there's a variety of ways that this could evolve. You might have NASDAQ or, those types of organizations roll their own chains that are permissioned or permissionless. You can also issue on, Ethereum or Base or Solana. How do you think about the maybe landscape of issuance today, and where does Doppler look to prioritize issuance based on the types of assets that are going through the protocol?
Yeah, I think like as you said, the current I mean, there's a lot of moats of why people IPO, obviously. But I'd say the biggest moat is the sort of like lemon market problem that exists in alternatives to the IPO market. Like the IPO market's good because it's been making public companies for 50, 60 years, or even longer than that. And it's been working. And so I think like that's the biggest challenge for competitors to the IPO is the like nobody ever got fired for hiring IBM problem. It's like I just don't want to have to think about this. I'm going to pick the first thing. And so how we think about it is the thing that Doppler wants to focus most on is these net new classes that can't exist. Outside of crypto, I think crypto generally, when it hits an amount of, it hits PMF or it finds something that's unique, it does it by doing something completely different. That's not just like the existing system, but better. And I think that that's like why we focus so heavily on these net new asset classes. And then, working with them to hopefully become a existing asset class. And I think that those are the first movers in this area. This on-chain capital formation is these net new internet native things that can't exist anywhere else. And then I think we'll see a lot of the learnings from that roll over into the like traditional IPO process that happens on the chain. So I think it's kind of hard to know because I think it's unclear what will win in the current sort of net new step. But I think I guess like in my hopeful world, like it's people just doing these on permissionless. It'll probably be sort of like a Nasdaq app chain that settles to some ledger like ETH or Solana. I think that that's probably just the most likely way to go is started to have like a Nasdaq app chain. But I think I was wrong about app chains like 2 years ago, so I don't want to be like app chains are coming.
I guess a more broader question to that then today, like how do you view Ethereum versus Solana?
Yeah, I mean, I think like for us or for everyone, I think that the Solana like obviously is very lindy, and so is Ethereum, and I think they've bootstrapped net different users. And there's a lot of overlap for sure, but I think that there's just like a set of users who does not want to leave Solana. There's a set of users that people doesn't want to leave Ethereum, and these assets, these chains, they're very different. They're surprisingly different, and sort of like a lot of the minutia that happens. Like specifically in block building on Solana is very impactfully different than the block building on Ethereum, and that has downstream impacts for all the applications and users using them. And so I think like any company just got to go where users are. There's users on Solana. They clearly do not want to leave, and you're not going to convince them to leave. So why even try? Just go to where they're at. I think the desire to like have one big chain that does everything is like probably not possible. I think it's going to be like these ecosystems, these sort of like these little different tribes that exist across everywhere, and it's sort of necessary to build pieces for all of them. And I think that's what we're going to see a lot more of is the net new the hard part about building a lot of these on-chain things is just having the unique context necessary to build these assets and then putting it in your cloud or whatever to code it up. And so to me it's like I think the coding is going to stop being the moat, and the moat is going to turn into being able to have this unique context that allows you to generate things on these new markets. And I think that's what we'll see broadly, just sort of across everything, is that it's just going to like the code, the chain, it's not going to matter. It's just like go to where it's the only thing that really matters is where the users are and like the applications are.
Yeah, it all comes down to distribution and meeting users where they are. And I think a lot of companies have realized that. That's why obviously why you see so many companies trying to build these like vertical chains, whether it's Robinhood or Stripe, or whoever else that I'm sure is coming down the pipeline. When you say that the moat is context, can you tease that out a bit more?
How I think about it is the code is kind of an implementation detail of like the underlying idea. And the underlying idea is the context. It's sort of this, what is the sort of like thing that AI can't do? And the thing, AIs today, they have like they're all sort of like they're trained on the same code or it's the same sort of like context. And so they're really good at like doing everything 80%. It's that last 20% that's like very novel. Like it's not very good at coming up with novel new ideas if it hasn't seen it yet. And that's what I sort of talk about as like context. It's like in your head, like in our head, we have some vision or some idea of like where this stuff's gonna go and what we need to build. The AI is not gonna be able to do that, but if we tell the AI like, hey, like, can you look at this or can you make this tweak to that's like something novel? It's actually like really good at implementing those things. And so for us, like I think building an AMM or building an issuance protocol is like very unique, difficult context to generate. The code about how the code, like writing it in Rust or writing it in Solidity, is kind of an implementation detail now. It used to not be. I think it used to be like, there were companies made on their ability to write this code. And there still will be, like there's like going to be security and all that stuff that still exists. But to me, this is going to increasingly not become important. It's like, if you have some unique idea, you're going to put it everywhere because that's where the customers are. And you're going to have AI and, really smart people dealing with all of sort of like the implementation details instead. Like what used to be an implementation, it's now coding is an implementation detail, which is not how it used to be for sure.
The mode of the technology becomes much less and it becomes more about speed and execution.
And
Yeah.
new ideas, I think. I think people like that's always to me the thing about AI is like if you don't have good ideas, it ain't gonna help you. You're like you can't be like make a novel protocol, please. It has no idea what novel means. It doesn't really know that. But if you say like, hey, I have this like 12 ideas, are they good or not? It's actually pretty good at that. That's where I think it's like execution and ideas. It's just like sort of like where is it gonna go and more of a predictive thing on a longer term period rather than like actual code execution.
Yeah, it doesn't matter if you vibe coded a bad idea; it's still a bad idea.
Yeah, it's
So
true. Slop in, slop out.
exactly, yeah, yeah, that makes sense. Awesome. I want to before we end, I want to do a quick fire where I ask a series of fast questions and you give me your first take gut response. The first is what asset do you wish was tokenized today but hasn't been?
That's a good one. I think the thing that I'm most excited about, I think we're starting to see this emergence of this, but it really just is like single solo man companies or like small companies that like would previously be a pre-seed or a series A or sorry, a pre-seed or a seed series company and then having those sort of take off. I think that people always talk about the solo, the one man unicorn. I'm so bullish on that. I don't know. I don't think it's going to come in the next year or so, but I think it eventually is going to probably happen. And that is just it's insane to think about that. Like you just never could do that in IPO that way. Like you would need at least a legal team to have that. And so I think like the thing I'm most excited about or I want to see the growth of is more small experimental companies that you just try some shit and if it fails, you just kill it and you move on to the next thing. And we sort of have these capital markets for experimentation. We don't really have that today. We have capital markets for the end piece, but we don't have capital markets for experimentation. So to me, that's what I'm most excited about is like micro companies that I think are pretty novel pushing these things forward. And we see a lot of these, they're just not really they haven't hit a critical mass yet.
And I hear you. It's definitely easier to do that. Easier as the solo entrepreneur, solo unicorn. It is easier to do that on chain than it is to go through like a traditional IPO process. Second question: what's one piece of advice that you would give to other founders who are just starting their founder journey?
Everything always seems more obvious to you than it is to everybody else. I had to like teach myself that one a lot. Is like, yeah, you have it in your head, but like and like you think it's obvious like what you should do to everybody else. It's really not. And so like you need to like tell these people what to do. I think the other thing is making sure that like you have a team around you that is like really high quality and is really mission driven. I think is something that I really looked for. Was like every single person I hired, I was like, do you like what we're doing? Because to me, like those are the people who go, they have this novel idea and they push these things forward. I always joke that like my job as a founder, this is not true, obviously, but like it's like having one good thought a month. Like if I have one really banging thought a month, like I will be probably fine. That's not entirely true, but I think like you want to have like that. You want to have a lot of this ownership down through your stack, where like everyone is one banging thought a month away, and you always want to be like rolling those things up because like you're fat. Like I can't think about all the stuff that the company's doing. It's just too much. And it's just easier to have to like delegate these things, and trusting these people who you're delegating to is actually extremely important. And keeping those people around is also very important. There's a lot of context they have. And like, people are people, companies are a collection of people. I think like we get on like this like money ball, like I can replace anyone. It's like, you can't really like, that's kind of fake. Like that's, morale and things like that are much more important than they seem.
Talent is always an edge. And then the
Yes.
final question: what's something that you've changed your mind on in the past year?
Man, I've been crazy the past year. I've been cooking. So I think I was the L2 experience. I'm trying to think about like things I've definitely changed. I don't know if it's the number one thing. I changed my mind on L2s a lot. I was really bullish on them. I'm kind of like bearish on them again. I would say I don't necessarily know the most impactful thing that I've changed my mind on. I thought like this IPO stuff was gonna happen a lot quicker than it did. Like that was just so obvious. It was gonna like this is back to my original point for what it's worth. Like I was like, oh, we're gonna do IPOs in like 6 months or something. And like that was crazy. It was never gonna happen. But I think like to me, that I think is pretty impactful. I think we've also sort of seen a push back on like we've sort of seen like revenue hit the idea maze wall. So like we've seen like these two competing, people in crypto where like one is like moonshot only crazy ideas and these rev sort of people. They sort of like hit each other really difficultly. And it's been, these two camps are trying to hash it out live. And I think I don't know. I've changed my mind a little bit. Like I gotta service the revenue people too. Like I think they're probably right in some sense that like that is a necessary thing to real companies. But I think that we've also abandoned a lot of like, crypto is a moonshot protocol. It's a moonshot thing. Like AI is too. It's like new technology always is a moonshot, and like to intentionally harden yourself to like revenue, I think is kind of silly. But I think I understand what they're talking about. But I would also encourage people like you're building a moonshot, as a startup. You're not like, I'm gonna make 10% a year or something, and I'm gonna get all this money. It's like,
Yeah, big ideas only.
yeah, get cooking, man. Get back in the idea mines and bring some good ones up, please.
Austin, thank you so much for joining. Where can people find you or more about Doppler?
Yeah, I'm A Adams on Twitter. I incessantly rant on there. Less so these days than I used to. And then Doppler is doppler.lol. We love talking to founders building new types of markets or trying to sort of go public with the assets they already have. We have like extreme customization sort of on every single step, and we think that like you can build the market that you want pretty easily and be pretty novel. So if you're trying to issue tokens or you're trying to make a new market, like hit me up, hit up the contact form, hit up Doppler in general, and yeah, go use our app. That's always, I gotta shield my own app. Gotta do it.
Thank you, Austin, so much for joining. For all the listeners, thank you for listening to Stateful Pantera podcast. Please like, subscribe, and share, and catch us on the next episode.